Hello everyone, welcome to FinTalks. Investment in mutual funds is definitely a right choice. But how to select a good mutual fund? How you know which mutual fund is performing better? For this purpose, you have to evaluate the performance of the mutual funds by using 5 parameters. What are that 5 parameters? Number 1, reputation of the fund managers. Mutual funds are issued by the asset management companies but managed by the fund managers. As an investor, you must know the history and previous track record of the fund managers, how efficiently they are managing their funds. Because it is the fund managers who can make your investment or even who can break your investment. As an investor, you have to check, verify whether the fund managers are keeping a track record of all the assets they are buying and selling, how they are identifying the new opportunities, how they are managing the portfolio of the funds, etc. The second parameter is assets under management, AUM. The total market value of all the assets or funds, that is cash, equity, debt, treasury, a fund has are known as assets under management. Generally, large cap and mid cap funds will have high volume of assets under management, and small cap funds will have low volume of assets under management, and this indicates the size and success of the fund. The third point parameter is portfolio turnover ratio. It is measured to know how frequently the fund managers are buying and selling the assets. It is calculated by taking total value of the new securities bought or sold, whichever is less, divided by total net value of the assets of the fund. Generally, a portfolio turnover ratio of above 50% is considered as high, and a ratio of between 20 to 30 is considered as a low. So, funds which are having high portfolio turnover ratio are considered as a actively managing funds and more preferable. And the fourth parameter is expense ratio. As an investor, you must know how much amount of money the fund managers are paying for the maintenance of the fund. An expense ratio of 1% indicates that 1% of the total value of the funds are used to cover the expenses of the fund. Generally, the fund which is having less expenses ratio, low expense ratio, is favorable and considerable. And last parameter, fifth one, is exit load. Open-ended mutual funds are available for investment anytime as per the convenience of the investors. But closed-ended mutual funds can be invested only during a particular period of time, and exit is possible only after completing locking period, maturity period. If you want to exit before completing maturity period or locking period, then you have to pay exit load charges, which is around between 1 to 2% of the net asset value of the fund. So generally, the mutual funds which are having the less exit load charges are preferable and considerable. If you evaluate the mutual funds performance by using these factors and take your investment decision, definitely it will be a wise decision, and that mutual funds will give you a good returns in the long run. If the information is useful for you, please subscribe and share. Thank you.